Firstly, thank you, Mr. Vaidya, Dr. Nicholas, and Paris for an enlightening session on the power of health and wellness. One of the key takeaways from this discussion is truly profound, and I hope you will agree with me on that. Ayurveda addresses the pain and imbalance within us even before it manifests as disease. With that, we are about to kick off with our panel for this evening. The panel will feature a distinguished group of investors diving deep into the world of venture capital. I'm sure that's a really exciting topic for all of you, so please reserve your energies and put your hands together for this exciting panel. An essential component of any startup looking to scale is venture capital. This panel will be led by Rachit Poddar, our very own powerhouse entrepreneur, known for his boundless energy and innovative mindset. Joining him are our esteemed panelists. First up is Mr. Amit Grover, founder of Grover and Company, driving innovation in food security and climate tech with 26 plus years of experience in marketing, consulting, and venture capital. Up next is Ms. Radhika Jain, CEO of Beyond Seed UAE, connecting investors with curated opportunities from early-stage startups across Asia, India, and the Middle East. Next, we have Dr. Bijna Kotak Dasani, an award-winning entrepreneur, venture capitalist, and advisory board member at the Indian Venture Capital Fund, recognized globally for her contributions to business and digital innovation. Then we have Arjun Vaidya, a D2C entrepreneur turned investor. Arjun built Dr. Vaidya's into India's largest Ayurveda brand online, leading it to a successful acquisition, and now heads venture investing at V3 Ventures, empowering early-stage startups in India. Welcome, Arjun. And finally, we have Khaleefa Alqubaisi, chairman of the minor tender board at Al Yasat Petroleum and former CFO. With extensive leadership experience across ADNOC subsidiaries, driving strategic financial and operational excellence in the energy sector. Let us please welcome our panelists with a huge round of applause. Over to you, Rachit.
So good evening, ladies and gentlemen. I hope everybody is energized after this impactful break and have had chance to make some meaningful connections. It's an incredible honor for me to be present with such an incredible set of panelists, diversifying from right from US to India to UK. Everybody's got a set of a very amazing, valuable experience that we will all love to hear from. Please. I think this is one of the most awaited panels because everybody's talking about venture capital. Everybody either wants to raise capital as a founder or as a fund manager, and it's very interesting to look at the whole landscape of how India and UAE has been really picking up the whole venture capital landscape. So over to you. I think the first question for Amit, I think because you've invested in over 15 to 16 funds across the world, right? And you've now based in UAE. How do you think the India startup landscape versus UAE landscape?
I think, there's no comparison. I mean, this is not apples to apples. This is apples to oranges. You're talking about almost a $5 trillion economy. So the startup landscape in India, in my opinion, is far matured when you compare to the UAE. Also the consumption, because India is such a big market for consumption. The value of exits, the size of business, next level. If we go back 2 years, I don't think any country in the world saw the amount of unicorns that India saw about 2 years back. So look, UAE is maturing, and it's maturing pretty fast at a rate which is probably faster than most of the world. But I don't think it'll be fair to compare India with it, purely based on the size of the market, the maturity landscape of the startup ecosystem, and some of the most talented entrepreneurs coming out of the country.
That's an interesting insight, Amit. So Arjun, you have been a founder, have had the largest exit in D2C space in India, right? And now you're a founder turned into venture capitalist, managing close to $150 million of AUM. So how do you think, which are the sectors that are picking up in India, and which kind of companies do you think could scale globally to markets like UAE or other markets like US, UK?
Sure. Firstly, thank you so much for having me. It's a proud moment for me to see Ivy Growth do this in Abu Dhabi. This is my 4 out of 4 now.
Oh, wow.
So excited to be here. And as I walked into this hotel also, it felt like a proud moment, right? That from Surat, we've come here and we're doing this. So I couldn't miss it. Really happy to be with all of you and have this conversation. And congratulations to you guys
Thank
first
you so
for
much.
bringing us here. Look, I've been very biased on my investment areas because I built a consumer business. And so those are the areas that I like to spend time on, investing in the consumer opportunity. I gave this example recently to someone. I used to run an Ayurvedic products business, and my factory was in a place called Silvassa, which is about 3.5 hours from Bombay. And I would stop at this toll plaza every time, and it was a typical like food court with some local joints, and then there was one McDonald's. And we were really excited when that McDonald's came there, and I used to have food at that McDonald's every single time. I invested in a company in Pune, and so I was driving back to Bombay, and I stopped at that same toll plaza. This time when I stopped at that toll plaza, there was Starbucks, Coco Cart, United Colors of Benetton, H&M, McDonald's, Burger King, KFC, and like 50 brands there. Even the local joints had become branded, right? And that is a silly example, but a representation of how deep the consumer investment opportunity has become in India across spaces, right? Whether you look at fashion, and I met some amazing entrepreneurs here building the collection from Akola in the fashion space. Very, very deep markets now where you get world-class products available from India. Health and wellness, personal care, food, lots changing in our ecosystem with the coming of quick commerce. But the most exciting thing for me now, and in my last trip, I came to Dubai about 2 weeks ago for work. The most exciting opportunity for me is that we have a lot of Indian brands doing some really exciting things. But this next decade for our Indian brands will be to go global, right? This next decade will be for our Indian brands to establish the footprint of India across the world. And I'm seeing that the first port of call outside of India is the UAE. And so it's very exciting to see Indian brands come here. There will be one D2C brand coming from my home that will be going global as well, which you guys will be hearing about soon, that my wife is starting. But yeah, I think this market, given its proximity, given the amount of sort of South Asian population, just becomes the first port of call. So we'll see a lot of Indian consumer brands coming here.
Amazing, amazing. Over to you, Radhika. Radhika, you've conceptualized Beyond Seed, which now operates in India, UAE, and Singapore. How do you think early stage funds are playing a pivotal role across different geographies? First you have angel investors, then you have these angel funds, and then you have the institutional investors, right? The large venture capital funds. But how does the angel funds actually play an impactful role within the whole of startup ecosystem?
Good evening, Rachit. Thank you for having me. And congratulations for your first international event. May this be first of many. So angel funds, Rachit, in our understanding, they plug a very important journey, a step in the journey of a startup, as it's moving from being a good idea, a great idea, to actually becoming an investable business. So starting with the founders who put in their own passion and their own money, you see bootstrapped investments coming in. Then the next set of people who come in are angel investors, maybe family and friends to start with. These are people who are still putting in money in the person, maybe not in the idea yet. That's where the angel funds like Beyond Seed come into the picture. We help the startup make that journey transition into becoming a more structured, a more formalized, institutionalized business by making the building blocks that it takes for them to become investable, become attractive to larger institutions down the line. So whether it requires coaching, whether it requires building the departments, the finances, the way they look at how they have a governance structure in their business. All of that is brought on as a value add by angel funds. Across geographies you mentioned, now each of these 3 geographies that we have been in, Singapore and then India and now Middle East, they are in very different stages in their own growth journeys as startup ecosystems. So Singapore perhaps started the first. India is on a boom on the journey. It has already seen that inflection point. UAE is probably the most nascent one out of these 3. But I must say, I've been here for 11 and a half years now. The way I have seen things change here in this country, I think we'll catch up faster. We'll make that journey faster than most other places. So we think we are in the right places at the right times. And the angel funds, the part of the journey, they need to be with the startups. Startups are just coming here. Angel investors are discovering different industries, different new age industries in the country. So we want to be part of the ecosystem and help develop it as much as we can.
Amazing, amazing. Over to you, Khaleefa. Khaleefa, you've been, being a local Emirati, having worked with large multinational organizations like ADNOC at a CXO level, having worked with very, very senior organizations. What do you think really takes for a company to be successful in a market like UAE? And, what kind of companies would you like to fund? Or, as a potential investor, what should an investor look at while funding a company in the Middle East?
Assalamu alaikum, everyone. Assalamu alaikum. I just need to welcome everyone to Abu Dhabi. I think this summit was established or was talked about with the guys here 3 years ago, that we intended to have a summit that's talking about investment and giving opportunity in UAE and even particularly in Abu Dhabi. And I think from the title itself that today we are talking about, it's fundraising to success. So it is all about a journey, and it's all about fundraising and making sure that the idea is having a successful story all the way. I think what makes Abu Dhabi or UAE in particular most successful exam, that because in UAE the idea gets examined, tested by multinational people, okay, and been invested by heavy capital in UAE locally, and getting in the market and have it gets its own flavor. And once the idea gets successful, then it gets a broader picture, either gets into the back of GCC and Middle East, or even sometimes goes into India and other places. So I think UAE has played a pivotal role crossing the border between the market in US, in Europe, and Middle East, and even going to India and China. I think we have a relation with multinational countries years ago, and always we have been improving all these ideas. So I think I would go to my colleagues on the real estate when he say, today we are harvesting this success. It is not, today the results become very evident to everyone that you want to try your idea, you come to UAE, make sure that once it's embedded in here, if it's success, it will be a success story all the way. If it's not, it will not show other places. Yes, there is some track here and there, detours, but I think today UAE has, I would say, a ground and ready infrastructure for accepting any ideas, okay, from different beliefs, from different ethnicity, that people can import this here without having without thinking they are alien. They look that they have a privilege here, getting the golden visa, getting the free zones, getting to the fundraising. And people here, because I think of funds availability, there is an thirsty of paying or investing in ideas and getting this. Because I think people here have seen successful unicorns, have been born in UAE, were raised in UAE, and then sold to the world. So today we are talking about Talabat here. It's getting millions of IPOs. And they have even increased their stake on shares because I think the description is very small. That's what I heard from bank actually, that people are not getting anything, so they have increased it. So I think putting things, I would always consider three things. UAE have been working long time ago, okay? It's not I would say, a very fine vision to go forward, but was working very assured to make sure that we have a very solid infrastructure. That's tomorrow, if you want to embed something on it, it's ready-made. You just go for the next floor. So that's, I think, why I think my few years now between India and UAE, it's making sure that I've seen many ideas have been imported from India to here, and vice versa. Even the regulation, even I remember our president, Sheikh Mohammed Allah Hafda, he visited India, and we have some regulators, they were purposely sent to India to learn about the free zones, these kind of things. So I think Abu Dhabi, UAE, and Dubai also played a pivotal role in making sure that the funds on the side, investor like fund regulations, investor regulation, and even availability of, I would say, an opportunity for new generation, young generation entrepreneurs to experiment their idea. We have different hubs in UAE all over that people can come up with a blank sheet of idea that then can be worth millions. So I think this is the way that I think today we are trying to do it in Surat, that to give this room there for people, that they can express their ideas from a blank sheet of paper, not necessarily to have fun, not necessarily to be a great people, but people who has an ideas that who have an ideas that can be converted to a product, then can be sold to everyone. I think this is part of my journey through investing in US, UAE, and India recently. That's, I think, where UAE has a bit of advantage. But again, India has the biggest market, which I think is always will be a desire for us. And I'm always there. Yeah.
Thank you very much, Khaleefa. That's quite insightful. So, Dr. Bijna, over to you. You sit on board of multiple venture capital funds across the UK, India, and UAE. How does the regulatory landscape affect the funding in different geographies? You have on one side you have SEBI from India, on one side you have DIFC in Dubai and ADGM in Abu Dhabi. How do you think the regulatory landscape is shaping and promoting funding across these geographies?
Thank you, Rachit, and good evening, everyone. And like my fellow panelists, I just want to congratulate you and the team on today and tomorrow in advance. I'm very happy to be here, and I think this is a fantastic dialogue to be having. So let me take this step by step. I've worked in the financial services ecosystem for 25 years, 20 years in capital markets as a banker and 5 in VC now. And prior to that as an angel investor. And I do sit on the boards and ICs of 5 funds globally. What I'm seeing is a pace of advancement in the UAE and in India that I think is second to none. So having worked in roles where I've been regulated and an approved person by the regulator, let's say in the US or in the UK or in Europe, I'm fully familiar with the number of things that have to be coordinated for execution to take place. And I think what's happened in the West is there has been a lot of building upon building upon building of frameworks, which over time has slowed down change and innovation. And I moved to India in 2018. And what I witnessed there through the pandemic and for the years thereafter was that the pace of innovation, the fluidity, the agility was second to none. I actually sat with regulators, and I sit on the boards and ICs of 2 Indian funds as well, and we're also LPs in a bunch of funds. It's incredible. They're looking at the lessons of the West, and they're actually saying, when they're defining policy, what can we learn from their mistakes? What can we learn from what they've done well? What can we learn from their mistakes? And how do we bring that into our home territory to try and drive and catalyze innovation. And again, I'm on the boards of funds here in the UAE, and I've had the pleasure of working with ADGM, DFSA, and also spending time in DIFC. And I see the same there. I mean, DIFC is incredible. I think it's become a really good launch pad for sandbox environments, for looking at what they're doing with digital assets, with crypto, for inviting innovation and saying, let's create a safe place to play, but take learnings out of that and then kind of channel those back into the ecosystem. So I think a lot of positive things happening, but I must also emphasize that the bilateral agreements between the regions are also very helpful. And then going back to what Arjun was talking about earlier, and I've been to that same place in Silvassa, and also that stop, and I have the same reflections, which is kind of filled with pride. Now considering myself someone that's an Indian in more ways than one, I think it's fantastic that the rate of innovation and the rate of growth is so aggressive, because I think it's doing incredible things. Both locally, but also the highest number of Indians outside of India are in the UAE. So this becomes a very natural place for progression, particularly for things like, consumer propositions. Even for fintech, if we just, and again, to Amit's point, we're not going to compare apples to oranges, but going back to your first question, if we look at the rate of growth, it's a VC investment, it's trebling in the UAE, by the end of this year. In India, it's up 50% year on year already. What we're seeing is larger and more comfortable ticket sizes. We're seeing a drop in megatrends, but we are seeing, I think 1.7 was the there's a return on exits, 1.7x this year so far. And what we are seeing is a lot of pre-IPO activity. So think sort of Zomato and what have you. That's exciting. I think India's in a place it's never been before, at least in our time. And hopefully that's a positive trajectory to continue on. And I think the UAE is a very solid partner to handshake with every step of the way. And I also think that the UAE is very open for Indians to come and do business. And that makes it a natural extension versus, let's say, a US or a UK or even Europe. I think the UAE is kind of the first place to kind of play safely. In fact, I'm also representing a company that we're venture partners to. It's an Indian company, consumer. They've just tied their first deal to launch in Dubai, and it's quite exciting for me to see their progress. Having launched in India, reached pretty decent revenue, and now sort of 50% profitability in just 4 or 5 years. They're coming here, but that's because there are so many enablers. But if we look at the sectors that I think the regulatory framework is supporting, in India we're seeing fintech, SaaS, technology having a general good play, AI, although AI is not revenue making anywhere in the world really, if you look at the numbers, yet. And there are some risks around that, but also EV. And I think in the UAE there are some similar synergies, although I think fintech is sort of 40% of deal flow and investment from a VC perspective in the region. So I think there are some commonalities, there are synergies. I think there's a really good handshake between the two regions. I think there's opportunity for other regions to learn from the UAE and the Indian partnership, formal and informal, because I think both of those exist. And then if we're looking at the informal, I think there's a lot of natural mentorship, sponsorship, and support between the regions as well. And I think that is also something that I haven't seen, having worked all over the world over the years, between two regions so closely and in such a structured way, although it's informal. So I think a lot of positives to take away. And I think all of us in this room will continue to build on that and support that framework.
Interesting. So I think talking about the India-UAE relationship, Amit, we're seeing amazing initiatives like ADGM setting up and Abu Dhabi Investment Authority setting up in GIFT City, and GIFT City promoting the whole investments in UAE. How do we sort of, as an investor community, how do we promote or facilitate the cross-border investments within India and UAE?
I think, Rachit, that's already happening. I mean, going back to Bijna's point on framework, trust me, I've spent the last 6 years investigating every offshore finance capital of the world, starting from Cayman to BVI to Malta to Bermuda, all the way to Luxembourg. Half a dozen funds are there that I've kind of built. I believe personally for category 3, so there are typically 2 forms of licenses for those who don't understand the VC space. One lets you manage under $100 million or up to $100 million, and the other is unlimited wealth management. There's no, literally, and I say this with a lot of authority, there's no country in the world that's cracked the regulation as well as the UAE has. And because of that, the amount of capital that's flowing in, especially for first-time fund managers, is insane. I mean, you know, I work with DIFC very closely, and the last figure, I'm not updated, but I believe we manage close to about $2.5 trillion of wealth, which makes us the 4th largest wealth management destination in the world. So honestly, I think from a perspective of regulation, you have a lot of cross-border investments happening from India into the UAE. Fund managers prefer to base their funds in ADGM and DIFC and not really go down the SEBI regulations in India in trying to build a regulated fund in India, especially people with a overseas focus. Now, Gift City, yes, it's a great initiative by the government of India, but honestly, they're trying to copy the DIFC and ADGM model, you know, and which is okay, because sooner or later you got to do that. But in terms of even Indian VCs, the preference right now for parking capital, even if you want to invest that capital back into India and Indian ventures, is ADGM and DIFC. And that, I think, that rate of growth is going to go propensely high. And I think it's going to be a while before the Gift City catches up.
You, Arjun, you know, I think one of the most talked about questions for an investor is, you know, the exit route. And I think you've taken one of the largest exits in D2C space. So how do you see the exit, you know, for startup founders and for investors coming, you know, shaping along the way?
Yeah, I think it's a important thing to talk about, because at some point that capital has to give return that eventually leads to more investment, and the cycle keeps going. And I think, at least in the Indian market, there had been a lot of vintages of funds where a lot of money went into companies that didn't have enough outcome. I think the big thing that's changed over the last 5 years is, for the larger late stage companies, IPO is actually a possibility. And you have seen IPOs like Zomato and Mamaearth and Policy Bazaar and Nykaa do reasonably okay in the markets and hold ground and make investors, late stage investors as well, money. The other thing that's now common, and I guess we were one of the early few that went through a strategic acquisition, is startups are now doing something different to what the incumbents were doing and add a certain amount of value to the incumbent business portfolios. So a digital focus, a focus on new age channels, a connect with consumers who are digitally native that maybe an incumbent won't have, right? So for example, for us, when we sold our business, we sold to a group that had more traditional retail assets. And so other than buying our business and getting an asset in the Ayurveda space, they also got access to a D2C brand, a team that did that. That team could then give learnings to the rest of the organization on these things, right? And after our exit, we would have seen maybe like 15, 20 D2C exits happening in India. It's become most important because only once capital sees return and capital sees what we call MOIC, or capital being returned back, will that capital have the guts, the gumption and the wherewithal to go back in? Like, I believe in the startup space. I invest a lot of my wealth into startups because I've seen an outcome. But for my dad, who's a traditional businessman, who's been running a jewelry business for the last 42 years, he keeps telling me that what you're doing is illiquid. And he keeps saying that you're keeping that capital for like 3, 4, 5, 6 years. The moment he sees liquidity in his startup investments that I've forced him to do, he will have much more confidence. And so the creation of exit outcomes are great for startup founders, creation of wealth that goes back into the ecosystem. But for all the capital that's going in, The moment you see something coming back, you have much more confidence to put that and more back. And so that's why it's exciting.
Exciting. Radhika, earlier back in, probably during the pandemic, we used to see a lot of startups were getting funded left, right, center purely on the basis of, they were using terminologies like AI or blockchain and, so on and so forth. But nowadays, a lot of brick and mortar companies are getting funded. A lot of manufacturing startups are getting funded. So how do you see that landscape evolving from a very tech-enabled approach to now a very consumer or a tech or a asset-heavy approach?
See, no conversation these days is finished without a AI discussion, right? See, in early 90s, if you were an internet business, you were doing something different and everybody wanted a piece of you. And then came a time when you needed to be on internet and that was assumed. I think in the AI journey, we are going through that journey and we'll get there very soon where it will be assumed that your business has to have an element of AI just to keep up because that's the norm, that's the base standard. So it's not like we have moved away from AI or blockchain or those things. It's just that it's become more integrated into the overall business ideas, overall solution deliveries that the businesses are creating now. On the other side, the attraction for things like manufacturing businesses, more physical, asset-heavy businesses, I believe the attraction has always been there. But probably during the pandemic time, the appetite by institutional investors probably went down a little bit because they're playing to a certain set of rules. So things like illiquidity, availability of exit, continued growth that you have to be able to show quarter on quarter are more important. So there was a shift of the investors that were probably funding these businesses during those lean years. So family offices, traditional businesses who are looking to diversify away, they became more investors of preference for these businesses. And now that it is becoming an AI-enabled manufacturing process, it just merges the best of both worlds. What is important to see as we go along is that AI, blockchain, and these things should not become just the buzzwords. Investors across the spectrum, whether they are VC funds or angel investors individually as well, family offices, they have become very conscious that there has to be a use case of AI or deep tech or whatever technology you are claiming to be using. You can't have a simple rules-based algorithm and call it an AI business anymore. So that is something that all sorts of businesses, whether they are manufacturing, whether they are retail, whether they are distribution businesses, will have to be mindful going forward is what I believe.
Thank you. Khaleefa, we've seen Nasdaq setting up in UAE. We've seen Abu Dhabi exchange coming in. But what would really take for UAE to get successful in the public markets?
UAE is already a presence in the public market. I think today I would go a little bit behind in here because UAE have established these sovereign wealth funds. They have already examined the whole world. Because Adia, Mubadala, other sovereign fund we have on different sizes, they have already examined I would say, all the markets in the world. So UAE have already gathered all the talent, either nationally, UAE national, and even internationally. So it opens the door for the talented people to come in here, to experiment their ideas, to come and even work in here. So these kind of I wouldn't say marketing, but its popularity gives it advancement on other areas. The clearance or transparency of laws, the availability of a special location where we are talking about free zones, labs for startup and all of this. So people have a window or rooms that is available for others people to come and test it and try to make trial and error and where it's accepted. In other places, I would see it more people tend to be conservative in the risky part, but in UAE there is an allowable risk. People goes and invest on ideas that might not be successful from day one, but at least have they can pave the road to get an successful ideas. And also UAE, I think, is pivotal. Like I think it's one of our agenda, like our mindset always is peace, trying to spread peace around the areas, is even give you like, the security, safety, that people knows that from whatever ethnicity I came from different countries and everything, I get in peace in here. So I don't think that you are from different country, I'm from here or something. But I think the spread of peace makes more, I think, culture, acceptance that people comes and join. So people does not think of UAE. I remember when I was back in US, I had a question from even he's an Arab guy. He said, what UAE look like? I said, have you been there? He said, no. Then few times I met him, I brought him picture of Abu Dhabi and Dubai. He said, this is Las Vegas or New York. I said, no, this is UAE. So a couple of years later, I've heard that he came and joined in here. And I remember one of the doctors I was meeting in the US. He was in George Washington University there. And he's a Saudi. And he lived entire his life in I remember in US. He told me in his word of mouth, if I go back to Middle East, I'll go to UAE. I said, why is that? He said, I feel if I go to UAE, don't feel that I have changed my culture. I feel that I'm in an area that it can dissolve or can accept others and that. Here is, I think, our strength. The other thing that UAE has a good, there is a good sense of examination here. Because we have dealt with many multinational, internationally and everywhere. Ideas gets in here, get even examined very intensely. So sometimes even ideas dies before it goes out because these ideas sometimes it's a local ideas, sometimes it's a regional ideas. So it really gets into multinational people in here. It gets examined by, is it widely accepted? So if it's covered most of the area in UAE and accepted by, I think, all our people in here, residents and nationals, it would be most likely successful outside. So the examination part here, the fund part here, and also the culture and environment makes it ahead of many other places. And other people likes to come in here. I remember we have started this ideas, Ivory Growth, to be in UAE. Okay, 3 years ago, it was a joke. Okay, we start saying, we will do it one day in here.
Thank you for supporting us and making it happen.
Yeah, so that's, I think one of it is, this summit is happening here. This people traveling from the world to join in here. I haven't seen doctor from Greece and UK and everyone. So people are joining here. They have a perception back on their mind that it's peaceful to come to UAE, experiment whether to get an idea or to give an idea. That's, I think, the exchange part plays a big role in UAE. Shukran and thank you, everyone.
Thank you.
So if I may add to that, Rachit, just on personal experience as well, public markets in UAE has seen a lot of traction and journey in the recent years. Till about a few years back, there used to be very few equity IPOs happening and local listings happening. Then it's not just the number of companies that are getting listed now that has increased, even the fabric of that companies, the look and feel has changed. So for example, Talabat IPO that Khaleefa just mentioned, it's a homegrown startup. And look at how successful and the level of oversubscription it's seen. So it bodes really well for the startup ecosystem as well, because now there is a much clearer path and a future for an encouragement for these startups. They can see an exit path as well.
And very interesting thing, Talabat was not born in UAE. It came migrating from other place, and it was born because it got successful here, it got into IPO. So this is, I think, is very living idea or example of how things can be matured. Either, I would say, maturity was enough in UAE, and then it grows organically, and it gets the exit part in here. So I think this is where it gets the unique part of UAE in terms of fundraising and even the startups culture.
So Dr. Bijna, I think today we have investors from across different spectrums, right? We have investors investing into public equities, into startups, into commodities, and trade finance. How do you think, for investors who've not invested into venture capital or startups before, how do you think they should enter or look at this space?
That's $1 million question because it's very subjective based on your risk appetite, your geography, your sector focus, all those good things. But I can give a couple of pointers because I've been an angel investor previously, and then we invest to our own family office, and then obviously into funds, and then now through the funds. As someone who's got, I guess, different lenses, I think what's interesting about investors coming into the ecosystem right now is that you're spoiled for choice. And you can actually pick and choose what your comfort level is before you go in and make a decision. I think also increasingly startups are becoming more sophisticated. And what I mean by that is they understand that there'll be a level of due diligence, whether it's coming from an institutional investor or an individual investor. And they're quite willing to be proactive about that. They're quite willing to be forthcoming about sharing information, sharing data, giving investors the confidence, generally across the board, that they make an interesting proposition for investment. I also think that founders are also evolving, at least in my experience. They understand that they need the right set of skills and balance to be able to convince investors to be with them for the right ticket size as well. So what I mean by that is, I've seen sort of startups that I've invested in, for example, that have the, bigger picture ability to reflect on where their skills lie, where there are strengths in the founding team skill set, and where they need to bring people in, right? So they'll actually say, okay, Bijna, I know that I'm a people's person, I'm a product person, but I'm not a salesperson, or I'm not a finance person, and this is why I need the funding, because I need to go build that team, and my product alone is not going to take me to the next step. So I think that level of transparency is also becoming more fluid, more broadly in the market, regardless of which region you look at. As an investor, depending on what you're looking to do, I think there's an opportunity to be more involved as well. I think founders are increasingly appreciative of support, informal, formal, whether it's mentorship, sponsorship, opening up conversations and introductions for partnerships, for further investment. I think also, as an early stage investor, it can be high risk, but it can also be high reward. And I think, given the nature of how the ecosystem is right now, you can definitely start small and then sort of scale up over a period of time. So I think there's a lot of opportunity, and it's definitely worth exploring because we've seen a lot of good, successful case studies, but of course being measured in your approach if you're doing this for the first time.
Interesting. So one last question for all the panelists here. So Amit, starting with you, what kind of businesses would you like to fund? I know you have a very different philosophy of investing into IP-led businesses, flipping them and selling it to a large corporate. But otherwise, if you were to invest into business, what kind of business would you invest into?
I think that question depends on the region that I'm in currently. So let's assume that this is UAE. I would definitely study the D33 agenda and the 2050 vision for the region and invest aligned with that goal. So right now, it's a lot about AI, it's a lot about machine learning, it's a lot about climate tech, green tech, renewable energy, and of course, retail e-commerce is very, very big in this part of the world. So this is a thing when you're investing, at least for me in person, it's very important, number one, to be aligned with the region because you're looking at returns. Number two, it's very important to have a fair amount of understanding of what you're investing in. It's not just a blind gamble. So yes, the short answer to that is definitely, I would pick climate tech and sustainability as a subject and followed by artificial intelligence if I was to invest.
Arjun?
Yeah, I think we're running out of time, so I'm going to keep it short. I said it earlier as well. I think the next generation of Indian brands need to come to places like this, and so any Indian brands looking to really take what we have from our country to offer to the world is what's exciting to me.
Radhika?
See, for early stage startups, I think one of the very important things that we evaluate is the founders and the founding team. So we are not very restrictive about the sector or the industry that we would look at, but we are very, very selective in the kind of founding team that we will work with. So it has to be people who understand what they are trying to do, what is the problem they're trying to solve, and they come in with the attitude that they will solve the problem no matter what it takes. Because every startup goes through the journey of not hitting against walls that they couldn't even foresee when they started. So that is definitely one very important point for us. In terms of technology scalability, yes, of course, looking for the business viability and application of those businesses as much as possible, span through multiple geographies, and find different solutions that are applicable across would be area of interest.
Khaleefa?
I think I would say that, first of all, look into fundraising and startups here. It's first you need to diversify your portfolios. And also, I think one of the unique things in UAE, I think, we should look at it. UAE government plays a good role, or a very pivotal role in inspiring the future of UAE. So you would assume that how strong the involvement of UAE and the climate change in COP28, the presence of that one. So you know that UAE is looking for sustainability, getting Masdar, ADNOC, and everyone, and even heavy industry as an oil, getting to the low carbon state. So today, recently, it was mentioned by Mr. Abedli, the UAE has gone with its president to cross the world from US all the way to Korea and Japan, and looking all the possible ways for IT solutions, AI, cloud-based data center, and all of this, microchips and everything. So there is a sense of environment here is getting, born. Others in the other countries, they are still getting from the seed stage, getting privately and not getting in the government side. But I think UAE is playing the government role is ahead of the private ones. So I think today everyone is rolling back on, and we are getting Microsoft here, we are getting Meta, we are getting all other AI companies. So people, I think, can examine the country, how it's working and how it's behaving. And I think let's make it assurance that the government is going toward this one. So this is where people should look at it, how the government is looking at these kind of things and moving forward.
Thanks. I'll keep it short, but I think I'm going to echo what Khaleefa said around diversification. So I always look at things from a portfolio lens, and I think it's important to drive value within your portfolio. So that is always important for me. The other thing is value creation versus valuation. We're seeing a lot of heightened valuations. They don't always necessarily make sense. And I don't think founders always necessarily understand what that can mean long term. So if we just take ChatGPT, for example, there were 12,000 versions of ChatGPT created last year. Not every single one of them is going to create value. So it's important for me to make sure that the value creation and the valuation go hand in hand and make sense. And then the third thing for me is talent. So if the leadership team understands the skills gap and has a clear ability to drive that business forward or to step aside and have a solid succession plan, then that's something that interests me and most of the funds that I'm with as well, and even our own portfolio. If we feel that it's the right product or the proposition, but the wrong people, and there isn't a solution around that, we tend to stay away. I think I've learned a lot of lessons over the years as to why that doesn't work. And we've seen some case studies in the media just in the last few months alone. So I think those three things are my tips.
Amazing. Thank you so much, all the esteemed panelists, for your valuable insights. Now I would love to open the floor for any questions that anybody might have. Any questions? I think we just have time for two, maybe. So I think.
Thank you. Hi, good evening, everybody. Thank you, Rachit. A very insightful session, and esteemed panelists, thank you very much, and very good evening to everybody. I'm Deep Nagpal. I represent Seven-Figure Wealth. I'm based out of Gurgaon, India. So my question primarily to Arjun, because I was listening very carefully on the investment side, and of course to Mr. Grover and Radhika. So how do you look at the secondary markets being deployed in India? I have been an avid investor. I have been investing into unlisted securities or pre-IPO securities revolving around India and Indian markets. Didn't get an exposure to put in capital markets or any other market outside the Indian continent. So the question is, I'll divide it into two parts, to be honest. How do you see the entry and the exit that happens in the global market, especially in UAE? Do founders invest? And how does the liquidity protocol? So my submission is, does the founder give an exit to their employees as a liquidity protocol when they give ESOPs to their key management personnel before the IPO? And this because the ecosystem is very simple in India, where you see unlisted securities being traded, and of course there is a super value unlocking that happens. Thank you.
Sure. Should I take that from a UAE perspective?
Go ahead.
So from a UAE perspective, purely what's happening here, it's still quite a nascent market for trading secondaries. And we've seen the emergence of some public listed companies that have now gone public, the government listed companies that have gone public, and the new emergence of Talabat. That's one of the examples that we keep talking about. But it's still in a very nascent stage. But the answer to that is, in the UAE, when you do give an exit, we don't have too many exits, and that's the God's honest truth at the moment, but we're going to have many, many more. Yes, the ESOPs are bought over as well. That's correct.
Yeah, I think from a India lens, honestly, it's evolution of market leads to evolution of everything around market as well. So I see every week now there is some ESOP buyback happening. There are now funds set up just for secondary buyouts. There are funds that have understood that VC funds or PE funds will have the end of life. They'll need to exit the portfolio, so they'll get a discount. But this is all new because the market has now evolved to get super specialists in. Liquidity is a problem, and we are still figuring it out, but you will see much more secondary buyouts, platforms to buy ESOPs, platforms for people to trade their angel investments, etc. It's coming now.
Just to add on, Radhika, just to add on, if you can comment on this. When you say liquidity, I firmly believe, not because I'm into the trade, I firmly believe liquidity in unlisted securities, especially in India, is not a difficult task right now because people are getting educated. Now they know who to approach, how to approach. Yes, Arjun, very well, when you said that there are funds being created or there are investment institutions who are looking to buy ESOPs. The real life example I'm going to give of course, hyper-local brand, Zepto, if I'm naming it aloud. I think one of the institutions that everybody knows, Motilal Oswal, did a primary infusion of that fund. But that is not accessible because the ESOPs aren't converted into demat securities. Yeah. And how do that affect, and how does that happen, of course, in the global market, if you can have a context on that?
Yeah. No, I think Amit and Arjun covered broadly for UAE market and India market as well. See, it's basically a question of evolution of the whole ecosystem, broadly on two sides. One is the opportunities. So how many startups, how many companies are doing this? You can look at it as the supply side. The other side is also important, which is the demand side. So who are the investors? Do you have investors, and are they evolved enough to look at it as an asset class by itself and be ready to trade in that? So if you compare India and UAE, for example, India is definitely a much further in its journey. The investors there already understand public equity markets very well. And that's why they are now comfortable to move into an illiquid asset class like in private equity. equity in private hands and do those secondary transactions. First do primary transactions and then secondary transactions as well. For something like UAE, again, it's going to be a part of journey. So we'll see it a few years down the line. But right now, we don't see too many transactions like that.